Welcome to Share Talk, the only podcast where investors come first.
Stephen, thank you for joining us today.
Well, very welcome.
You've had some great results recently. Can you tell us a little bit about what's been going on?
Yeah, I think we're in a very good place, Catherine. We've had very good results from the tests, which I've talked about before. I suppose in a nutshell, we're still producing oil at Horse Hill, and it's giving us sort of gross sales of about $18,000 a day, which is a nice place to be in. It'll carry on until we drill the next wells, and we're funded for those. We've clearly put in some very ambitious but realistic plans that we announced the other day. So I think, 2019 has started off very nicely, thank you.
Great. And can you tell us about your future cash generation plans?
Yeah, well, obviously, the aim of everything at Horse Hill is to get it into production. Now, we've got the planning application in December. We expect to have all the boxes ticked by, September or so, which, builds in quite a bit of margin for some delays. But primarily, we're there to generate money. We put out some realistic targets that were, backed up by our independent auditors, Xodus. And, we haven't just made them up. The 3 times the vertical well rate, which is about 300 or so, that gives us 1,000 barrels a day. Now, 1,000 barrels a day, even at $60, is, that's a nice amount of revenue. That's $60,000. But what it means in terms of, sort of net to the project is about 15 million pounds per year for one well, and we're planning to have 2 or more. So, next year we could be looking at, 30 million quid in cash. And, cash is always king. So that has an impact, obviously, on do we have to go to the market for other things. So, that has an impact on shareholders because they always think about, oh, well, it's good, but we're going to get diluted. So, the whole point is that we generate more money than we actually spend. It's called profit, Of course, we pay taxes on that. So I think, we're in a good place right now. So
shareholders, things are looking good for them?
Well, I hope so. One can never tell at times. No, I think they should be very happy, I think. I think, the oil business is not a short time sort of turnaround business. It takes time. I think we try and push things as quickly as possible, but much quicker than our, sort of peers, if you like. But I think, the whole point of our business is we're in it to make money, obviously. What we're doing, the production, okay, it produces cash, but that's only one part of the equation, because what we're trying to do, and what we said in the release the other day, is we're trying to actually have reserves. And what does that mean? Well, it actually means that someone, probably Xodus in this case, says that we have X million barrels in the ground that we can get out commercially. So effectively it's not just a pool of oil, it's a pool of money in the ground. And that we calculate the value based on what's called a discounted cash flow basis. But roughly speaking, that oil, for every barrel in that, that money reservoir there, it's worth about 15 to 18 pounds a barrel. So, as I said in the release, Horse Hill, is a good sized field. We hope that we might get 10 million barrels out of it. So that's 150 to 180 million barrels, if in the success case, or 180 million pounds in the success case. But when we look at the other things like Arreton, which is at the moment 15 million barrels, that only assumes quite a small recovery of about 10% of the oil. The oil in place is 4 times Horse Hill. So that could be 250 to 500 million if if it's 15 to $18, 18 pounds a barrel. So that's a big chunk of value for the company. And why is that good for shareholders? Because basically that pool of money means that you can actually borrow against it on a debt basis, i.e. it's just like taking out a loan. So that means that you then don't have to go to the market to actually raise money via issuing more shares. So, the more we produce and the more reserves we have in the ground, that's good for everybody. So, that's the name of the game. Reserves are really when you look at, for instance, valuing an oil company, if you're going to buy it, you're going to buy an asset, you always look at what is the value of the oil in the ground. At least that's what the oil industry does. It's not so much the cash it's generating, but it's generally what is the money you're going to get from it in the ground. So I think that's a very important point. People shouldn't just look at, what's happening now. They should look at, we're trying to create quite a large pool of value in the company. And I think we're in a very good position because we have the largest acreage holding in the south. We have a lot of very high quality prospects and discoveries. And really next year, this year is Horse Hill, next year is about converting those projects, Arreton on the Isle of Wight, Godley Bridge, just near Horse Hill, converting those in from discovered oil into reserves. So, I think in 2 years' time, the value of the company hopefully should be many multiples of what it is now. That's what we're striving for.
That's the plan.
That's the plan. That's the plan.
Thank you.
So far we generally deliver, but we'll see.
Well, thank you, Stephen. It looks like 2019 has got off to a great start for you.
Yeah, long may it continue.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.